thought winning trades was what would make me a real trader. I was wrong. For 3 years, I chased wins. I studied patterns, memorized indicators, followed every guru on Twitter. I was obsessed with being right. And sometimes I was right. Those wins felt incredible. Like I'd cracked the code, like I was destined for greatness. But every time I thought I had it figured out, the market would humble me. Again and again and again. Maybe you know this cycle. You have a great week. You increase your position size. You get cocky. Then one bad trade turns into 5. 5 turns into 20. 20 turns into, honey, we need to talk. The truth is, I didn't start trading until I learned how to lose. And I mean really lose. Not just money, but ego, identity, the story I told myself about who I was. This video isn't about strategies. It's not about finding the perfect entry or exit. It's about psychology, about the one skill that separates professionals from everyone else. The ability to lose properly. You're going to hear real stories of traders who broke, mentally, emotionally, financially. You'll hear how I broke, and you'll learn why mastering loss isn't just important for trading. It's the foundation of everything. Before we go deeper, we need to destroy a lie. A lie that ruins more traders than bad strategies, poor timing, or even lack of capital. The lie is this: successful traders win more than they lose. Most beginners think success looks like this: 80% win rate, maybe 90%. They think pros just don't lose very often. Here's the truth. Many of the best traders in the world win less than 50% of the time. Some win only 30% of their trades. The turtle traders, one of the most famous trading experiments in history, had win rates around 40%. Yet they made hundreds of millions of dollars. Meet David. Not his real name, but his story is real. David was the envy of every trading forum. For 8 months, he won 80% of his trades. $500 profit, $300 profit, $700 profit, day after day, week after week. His account grew from $10,000 to $45,000. David posted his results everywhere. Trading Discord servers worshipped him. His friends asked for stock tips. His confidence was through the roof. But David had a problem he didn't see coming. He was terrified of taking losses. When a trade went against him, David would exit fast. $50 loss maximum. Sometimes $20. He couldn't stomach seeing red in his portfolio. But here's what David didn't understand. He was training himself to be afraid of normal market movement. He was creating a ticking time bomb. March 15th, 2023. David enters a trade on Nvidia. It immediately goes against him. But this time, instead of taking his usual small loss, he froze. It has to come back, he thought. I'm the 80% guy. I don't lose big trades. $500 loss, $1,000 loss, $2,500 loss. David couldn't admit he was wrong. His identity was built on being right. That one trade cost him $18,000. In one day, David lost 40% of his account, not because he was a bad trader, because he never learned how to lose. David fell victim to 2 psychological traps that destroy more traders than any technical analysis ever could. Loss aversion. Humans feel losses twice as intensely as equivalent gains. Losing $100 hurts more than winning $100 feels good. David's 80% win rate wasn't a strength. It was an addiction to avoiding psychological pain. The gambler's fallacy. David believed his past wins predicted future wins. He thought being right 80% of the time meant he deserved to be right on that Nvidia trade. But the market doesn't care about your track record. Here's the practical takeaway that could save your trading career. Your win rate means absolutely nothing without context. David won 80% of his trades and lost money. A professional trader might win 40% and make millions. It's not about how often you're right. It's about how much you make when you're right and how little you lose when you're wrong. My story starts like most traders' stories, with arrogance disguised as confidence. 2019. I'd been trading for 6 months. I'd read the books, watched the YouTube videos, joined the Discord servers. I was making money. Not a lot, but enough to feel dangerous. My first big win was on Tesla. I bought calls before earnings and made $3,000 in one day. More money than I'd ever made in a single day in my life. The rush was incredible. I felt like a genius. Like I'd unlocked some secret the rest of the world didn't understand, so I did what every amateur does. I increased my position sizes. If $1,000 could make me $3,000, then $5,000 could make me $15,000, right? For 2 months, it worked. My account grew from $15,000 to $32,000. I was averaging $400 a day. I started telling my girlfriend I might quit my job. Then October happened. The market started getting choppy. My usual strategies stopped working. But instead of adapting, I doubled down. I convinced myself it was just a temporary setback. Real traders push through drawdowns, I told myself. $32,000 became $28,000, then $24,000, then $19,000. But I wasn't worried. I'd made it back before. Here's what I didn't understand then. I had built my entire identity around being a successful trader. Not just my financial identity, my personal identity. I posted my wins on social media. I gave my friends stock tips. I talked about trading at parties. I was the trader in my group. When the losses started mounting, it wasn't just money disappearing, it was my sense of self. If I wasn't a successful trader, who was I? December the 18th, 2019. I'll never forget this date. Not because of what I lost, but because of who I became. I woke up feeling good. The market had been green the previous day. My account was at $21,000, still down from my peak, but I had a plan to get it back. I found what I thought was a perfect setup. AMD was breaking out of a consolidation pattern. Every indicator was screaming, buy. This was going to be the trade that turned everything around. I bought $15,000 worth of AMD calls, 70% of my account. Way more than I usually risked, but I was certain. This was my moment. Within an hour, AMD started dropping. Not a lot, just normal market movement, but after my recent losses, I was on edge. It's fine, I told myself. This is just a pullback. It'll recover. But my hands were shaking. My heart was racing. I couldn't focus on anything else. By noon, I was down $2,000. By 2 p.m., down $4,000. The trade that was supposed to save my account was destroying it. That's when something inside me snapped. Not broke, snapped. Like a rubber band under too much tension. I sold the AMD calls for a $5,000 loss. But instead of walking away, instead of taking a break, I decided to get it back. What happened next, I call the Hulk trade. Not because I was green, but because I lost all rational thought. I became a different person. I bought SPY puts, sold them 20 minutes later for a loss, bought Tesla calls, sold those for a loss, bought Bitcoin, sold that for a loss. Each loss made me angrier. Each loss made me more desperate. Each loss convinced me that the next trade would fix everything. By 3:30 p.m., my account was down to $9,000. I had one more idea, one more sure thing. I put the entire $9,000 into weekly Apple calls. Expire in 2 days. If it worked, I'd make back everything. If it didn't, Apple dropped 3% in the last 30 minutes of trading. December 18th, 2019, 4 p.m. Account balance $847. I had lost $31,000 in 6 months. But that wasn't the worst part. The worst part was looking in the mirror and not recognizing the person staring back at me. I sat in my car in the parking garage for 2 hours. I couldn't go home. I couldn't face my girlfriend. I couldn't face myself. That night, I realized something that would change my life. Losing wasn't my problem. Not knowing how to lose was. I had spent 3 years learning how to win. I had spent 0 minutes learning how to lose. And in trading, if you don't know how to lose, you'll lose everything. My breakdown wasn't unique. Every trader has a story like this. The details change, but the psychology is identical. Let me tell you about 3 traders whose stories taught me that no one, and I mean no one, is immune to the psychology of loss. Mark had been trading for 7 years. Not a rookie, not some kid with a Robinhood account. He managed a $2 million portfolio for a small hedge fund. MBA from Wharton. CFA designation. He understood risk management better than 99% of traders. On paper, Mark was everything you'd want in a professional trader. For 6 years, Mark's returns were steady, 12 to 15% annually, low volatility. His boss loved him. His investors trusted him. But Mark had a secret weakness he didn't even know about. He had never experienced a real losing streak. Sure, he'd had bad days, bad weeks, but never a sustained period where everything went wrong. March 2020. COVID hits. Markets start crashing. Mark sees opportunity where others see chaos. His analysis was solid. Markets were oversold. Panic selling was creating value opportunities. Mark started buying tech stocks at what he thought were discount prices. But the crash kept getting worse. Netflix dropped 30%, Amazon dropped 25%, Apple dropped 35%. Every discount became a bigger discount the next day. In 2 weeks, Mark's portfolio was down 18%. For someone used to 2 to 3% monthly volatility, this felt like the world was ending. This is where neuroscience becomes critical. Mark's amygdala, the brain's fear center, was flooded with cortisol and adrenaline. His rational mind went offline. Instead of sticking to his risk management rules, Mark started making emotional decisions. He sold positions at the worst possible times. He bought puts at the bottom. He was fighting the last battle instead of the current one. By April, Mark's portfolio was down 35%. His 7-year track record was destroyed in 6 weeks. Mark eventually recovered, but it took 2 years and a complete overhaul of his psychology. He learned to recognize when his amygdala was taking over. He implemented circuit breakers, automatic rules that forced him to step away when losses hit certain levels. Mark told me, "I thought I understood risk because I could calculate it, but risk isn't a number, it's an emotion, and if you can't manage the emotion, the number doesn't matter." Sarah was 24 when she started trading, college graduate, computer science degree, working at a tech startup, smart, analytical, disciplined in every other area of her life. Sarah's first year was incredible. She turned $5,000 into $47,000, trading growth stocks and options. Her win rate was 73%. Her confidence was sky high. Sarah started posting her wins on Instagram and TikTok. Her following grew to 50,000 people. Brands started reaching out for sponsorships. She was living the trader influencer dream. What Sarah didn't realize was that she had become addicted to the neurochemical rush of winning trades. Every green trade released dopamine, the same chemical released by cocaine, gambling, and social media likes. Like any addiction, Sarah needed bigger and bigger hits to feel the same high. $500 wins became boring. She needed $2,000 wins, then $5,000 wins. Sarah started risking 30%, then 50%, then 70% of her account on single trades. Her followers loved it. Diamond Hands Sarah, they called her. She was their inspiration. October 2022. Sarah hit a losing streak, 7 losing trades in a row. But instead of reducing her position sizes, she increased them. "I'm due for a winner," she thought. "This is just variance. I'm a 73% trader." Trade 8 lost 40% of her remaining account. Trade 9 lost 60% of what was left. Trade 10, game over. Sarah's $47,000 account became $3,200 in 3 weeks. But the financial loss wasn't the worst part. Sarah's followers turned on her viciously. "Fake guru, you cost me my rent money. I should have known you were a fraud." The same dopamine system that had given her highs now gave her crushing lows. Sarah fell into a deep depression. She deleted all her social media accounts and didn't trade for 8 months. Sarah eventually came back to trading. But she was a completely different person. She limited herself to 2% risk per trade. No exceptions. She stopped posting her trades. She treated trading like a business, not a content creation opportunity. Sarah told me, "I thought I was managing risk, but I was really chasing highs." When you're addicted to the feeling of winning, you stop thinking clearly about losing. And that's when you lose everything. James is the story that scared me the most, because James was who I wanted to become. 15 years of trading experience, economics PhD, former Goldman Sachs analyst, author of 2 trading books. If anyone should have been immune to psychological traps, it was James. For 12 years, James was consistently profitable. Not spectacular returns, but steady. He had a reputation in the industry as a smart money trader. 2021, the meme stock craze was in full swing. GameStop, AMC, Bed Bath, and beyond. James watched amateur traders making millions on stocks he considered fundamentally worthless. James's analysis was spot on. These stocks were massively overvalued. The fundamentals didn't support the prices. It was a bubble that would inevitably burst. So James started shorting. Small positions at first, then larger ones as the stocks kept climbing irrationally. But being right and being profitable are 2 different things. GameStop went from $40 to $200 to $400. James's short positions were bleeding money. This is where James's ego became his enemy. He couldn't accept that amateur traders on Reddit were making money while he the expert, was losing. The market is wrong, James thought. I have a PhD in economics. These kids don't understand valuation. So he doubled down, then tripled down. January 28th, 2021. GameStop hits $480. James gets a margin call for $400,000. His broker starts force liquidating his positions at the worst possible moment. James lost $800,000 in 3 weeks. Not just his trading capital, money borrowed against his house, his retirement accounts, his kids' college funds. James eventually rebuilt, but it took 3 years and a complete ego overhaul. James told me, I thought my intelligence would protect me from emotional trading. But ego is just another emotion. When your identity is tied to being right, you can't afford to be wrong. And in trading, if you can't afford to be wrong, you can't afford to trade. Mark, Sarah, and James. Different ages, different backgrounds, different experience levels. But they all fell into the same trap. They never learned how to lose properly. Mark couldn't handle sustained losses. Sarah couldn't handle breaking her winning streak. James couldn't handle being wrong. And here's what terrified me. I saw myself in all 3 stories. The same psychological traps, the same emotional patterns, the same inevitable outcomes. After my breakdown, I didn't trade for 4 months. I couldn't. Every time I looked at a chart, I felt sick to my stomach. I kept asking myself the same questions. Am I cut out for this? Was this all just an expensive lesson in humility? Should I give up and get a normal job? The hardest part wasn't losing the money. It was losing my identity. For 3 years, I had been a trader. Now what was I? I realized I had been asking the wrong question. Instead of, how do I become a profitable trader? I should have been asking, how do I become the type of person who can handle being wrong? And the breakthrough came from an unexpected source. I was reading about professional poker players, not trading content, but poker psychology. One player said something that hit me like lightning. Good poker players don't win because they get better cards. They win because they lose with bad cards more efficiently than their opponents. That's when it clicked. Trading isn't about being right more often than you're wrong. It's about being wrong more efficiently than other people. I started thinking about trading like boxing. The best boxers aren't the ones who never get hit. They're the ones who can take a punch and keep fighting. Muhammad Ali got hit thousands of times in his career, but he knew how to get hit. He knew how to protect his vital organs, how to absorb impact, how to recover quickly. Losing trades are like getting punched. They're inevitable. The question isn't whether you'll get hit. It's whether you'll stay standing after you do. I started reframing every loss. Instead of seeing them as failures, I started seeing them as tuition payments to the market university. Lost $500 on a bad entry? That's $500 to learn about patience. Lost $1,000 holding too long? That's $1,000 to learn about discipline. But here's the key insight that changed everything. I stopped trying to avoid losses and started trying to control them. I researched the best traders in history. Jesse Livermore lost money on 60% of his trades. Paul Tudor Jones has said he's wrong more than he's right. Even Warren Buffett has losing investments. The common thread wasn't that they avoided losses. It's that they made their losses small and their wins big. That's when I realized I had been trying to become superhuman. I wanted to be the trader who was always right. But being always right isn't human. It's not even possible. I set a new goal for myself. Instead of trying to win 80% of my trades, I decided to lose properly on 100% of my losing trades. Losing properly meant cutting losses quickly, not revenge trading, not increasing position sizes after losses, not letting ego drive decisions. I stopped asking, how can I be right more often? And started asking, how can I be wrong more gracefully? Mindset shifts are great, but they're not enough. You need systems. You need frameworks. You need rules that protect you from yourself when your emotions are running high. Over the next year, I developed what I call the loss mastery system. 5 frameworks that turn me from an emotional trader into a disciplined one. Rule number 1, never risk more than 2% of your account on any single trade. Not 3%, not 5% on a sure thing. 2%, period. If you have a $10,000 account, your maximum loss per trade is $200. If you have a $50,000 account, it's $1,000. This isn't a suggestion, it's a law. Let me show you why this works. If you lose 2% 15 times in a row, which almost never happens, you're down 26%. Painful, but recoverable. If you lose 10% 15 times in a row, you're down 79%. Your account is destroyed. Remember Sarah from earlier? She was risking 50% of her account on trades. One bad streak wiped her out. If she had used the 2% rule, she'd still be trading today. Framework 2 is the 3-strike rule. After 3 losing trades in a row, you stop trading for the day. No exceptions. Why 3? Because by the 3rd loss, your brain is flooded with stress hormones. Your decision-making is compromised. You're no longer trading, you're reacting. This rule saved me $5,000 in my first month using it. I hit 3 losses by 11 a.m., wanted to get it back, but my rule forced me to walk away. The market crashed that afternoon. I would have lost everything. Mark could have saved his career with this rule. Instead of trying to trade his way out of losses, he should have stepped away and let his rational mind reset. Framework 3. After every losing trade, write down not just what happened, but how you felt. Lost $300 on Apple. Felt anxious after entry. Should have waited for better setup. Emotional state, 6 out of 10. Frustrated, but controlled. After a month of this, patterns emerge. You'll see that you lose more money when you're frustrated, tired, or trying to get even from previous losses. My journal revealed that 80% of my big losses happened on Fridays. I was forcing trades to end the week strong. Now I rarely trade on Fridays. Framework 4 is the most important. Change your identity from trader to risk manager who occasionally takes trades. A trader asks, how can I make money on this trade? A risk manager asks, how can I lose the least money if this trade goes wrong? Every professional trading firm has risk managers. Their job isn't to make money, it's to make sure the traders don't lose too much money. James's ego couldn't accept being wrong because his identity was smart trader. If he had thought of himself as a risk manager, he would have cut his losses early. Framework 5. Protect your winners the same way you limit your losers. When a trade goes in your favor, take partial profits. Sell 25% at 2 times your risk, another 25% at 3 times your risk. Let the rest run with a trailing stop. This does 2 things. It guarantees you'll have some winners to offset your losers, and it removes the emotional pressure of trying to time the perfect exit. I bought Nvidia at $200, risked $4 per share, so my stop was at $196. When it hit $208, 2 times my risk, I sold 25%. When it hit $212, 3 times, I sold another 25%. The remaining 50% rode up to $240 before I got stopped out. Even though Nvidia eventually pulled back to $210, I still made money because I protected my profits systematically, not emotionally. These 5 frameworks work together like armor. Any one of them alone won't save you. But together, they create a system that's almost impossible to break. In my first year using this system, my win rate was 43%, but my account grew 47%. I was losing more trades than I was winning, but I was finally making money consistently. Lisa was a swing trader who kept blowing up her account every 6 months. Smart person, good analysis, terrible risk management. Before the system, win rate 78%, but lost $25,000 in one bad month. After implementing these frameworks, win rate 52%, but consistent monthly profits for 18 months straight. Lisa told me, I thought I needed to be right more often. Turns out I just needed to be wrong more intelligently. Marcus lost $180,000 in crypto trading in 2021. Thought his trading career was over. Used these frameworks to rebuild from $5,000. 2 years later, Marcus has grown that $5,000 to $73,000. Not by hitting home runs, but by hitting singles and never striking out catastrophically. Marcus told me, the frameworks didn't make me a better picker of winners. They made me a professional loser, and that's what changed everything. The frameworks were important, but the real change was deeper. It was identity level. I had to become a different type of person. Before mastering loss, I was driven by ego. Every trade was a test of my intelligence. Every loss was a personal attack on my self-worth. I would argue with the market. This stock should be higher. I would revenge trade after losses. I'll show this market who's boss. I would increase position sizes after wins. I'm hot, time to press my advantage. My mood was tied to my profit and loss. Green day, I was a genius. Red day, I was worthless. My girlfriend could tell how my trades went by how I walked through the door. After learning to lose properly, I became process-driven instead of outcome-driven. My self-worth wasn't tied to individual trades. A losing trade didn't make me angry. It made me curious. What can I learn from this? A winning trade didn't make me cocky. It made me cautious. How can I protect these gains? My mood became stable. Win or lose, I was the same person, because I knew that both wins and losses were just data points in a larger process. There's a quote that became my trading mantra. You don't win because you avoided losses. You win because you controlled how you lose. Read that again. You don't win because you avoided losses. You win because you controlled how you lose. This isn't just about position sizing or stop losses. It's about emotional control. It's about staying rational when everyone else is panicking. It's about making decisions based on process, not feelings. Professional traders don't get excited about wins or depressed about losses. They get excited about following their process correctly. Amateur. Yes, I made $2,000 today. I'm a genius. Professional. Good, I followed my risk management rules and got rewarded by probability. Amateur. Damn, I lost $500 today. This market is rigged. Professional. Normal day. My system accounts for this. Tomorrow, I follow the same process. The final piece of the identity shift was accepting this truth. Being wrong doesn't matter. Staying wrong does. Every professional trader is wrong constantly. The difference is they change their mind quickly when new information appears. Last month, I bought Tesla thinking it would bounce off support. It didn't. I was wrong. I cut the loss in 20 minutes and moved on. Old me would have held it for days, hoping to be proven right. There's incredible freedom in accepting that you'll be wrong half the time. It removes the pressure to be perfect and lets you focus on being profitable. Let's go back to where we started. That day in December 2019 when I lost everything. That moment when I sat in my car, staring at an $847 account balance. At the time, I thought it was the worst day of my trading career. Now, I know it was the best, because that day taught me something that no winning streak ever could. Losing isn't the opposite of winning in trading. Losing properly is winning. Every successful trader has a story like mine, a moment when they lost everything and had to rebuild from scratch. Not because they were bad traders, but because they had to learn how to lose. Remember Mark, who lost 35% during COVID? He's now managing $5 million and hasn't had a drawdown over 8% in 3 years. Remember Sarah, who blew up her $47,000 account? She's back to trading, but with a 2% risk rule and no social media pressure. She's made consistent profits for 18 months. Remember James, who lost $800,000 shorting meme stocks? He's rebuilt his career by checking his ego and respecting the market's irrationality. What do they all have in common? They learned that their relationship with losing was more important than their ability to win. Losing properly is the skill that separates professionals from everyone else. Anyone can get lucky. Anyone can have a good month or even a good year. But only professionals can lose money gracefully. Only professionals can take a punch and keep fighting. Only professionals understand that losing isn't failure, it's just cost of doing business. If you're watching this video, you're probably where I was 5 years ago. Maybe you've had some wins. Maybe you've had some devastating losses. Maybe you're questioning whether you're cut out for this. Here's what I want you to know. Your future as a trader doesn't depend on how smart you are, how much capital you have, or how many patterns you can recognize. Your future as a trader depends on whether you can master this one skill, losing properly. So here's my challenge to you. For the next month, don't focus on winning more trades. Focus on losing better trades. Implement the 2% rule. Use the 3-strike system. Keep a loss journal. Think of yourself as a risk manager first, trader second. If you do this, if you really commit to mastering loss instead of chasing wins, I promise you'll become a different type of trader. Maybe not immediately profitable, but definitely professional. Stop asking, how do I win more? Start asking, how do I lose better? Stop saying I can't afford to lose. Start saying I can't afford to lose badly. Stop thinking losses are failures. Start thinking losses are tuition. The market will always be here. It will always be ready to take your money if you let it. But it will also always be ready to reward you if you approach it with respect, discipline, and proper risk management. You don't beat the market by being smarter than it. You survive the market by being more disciplined than your emotions. Master your losses, and the wins will take care of themselves. If this video changed how you think about trading psychology, hit that subscribe button. This channel is for traders who want to understand the mental game, not just the technical game. In the comments, tell me about your worst trading loss and what it taught you. Let's build a community of traders who aren't afraid to share their failures because we know that's how we grow. Remember, the market doesn't care about your ego, your bills, or your dreams, but it will respect your discipline. Master your losses, and you'll master your future.